All right, let's just go through some trends. There was a number of trends, and we'll just go through them. What the hell happened here? What I did. There you go. Anyway, shit. I think, anyway, let's go through the trends. There was a number of them. Let's start. All right, we'll start with the 831. So whenever you do a trend analysis, one hint is always take a look at 2 time frames, because you always have trends within trends, meaning a trend can just be a pullback or a trend can be a counter trend. These 2 scenarios are very important to know because they have different characteristics. Especially pullbacks, they have high likelihood of stopping at key levels that provide for reversals. So, and counter trends, they suck. Like, they have a lot of spring and upthrust on counter trends, so it's very important to know that. Anyway, so we'll go over this one here. Where it is here. Okay, yeah, let's go to this one here first. So this was the first one. What happened? Market climaxed. But when we take a look at the higher brick size, we notice that it's climaxing and reversing, but it's doing that as the market moves down and rallies down. So in the higher brick size or the higher time frame, the market is in a down rally position, meaning the rally is about to turn. So as that bear rally is about to turn, you get a turning point. We're going to examine those turning points along with their trends on the lower time frame with relation to the higher time frame position. So here you have a climax, you have shit in the middle. Then finally at this area you have absorption and you have your CLB, a change of behavior. All right. The key here is, first step is, you see there's a turning point, but you have to, in your mind, be able to classify it. I am a big proponent of this because it matters in order for you to figure out when it's likely to occur and what type of behavior also to expect. So here you have a rally down on the higher time frame or higher brick size, and you have a turning point that starts with the climax. The higher time frame is in a rally position. So this is a counter trend that's basically going to set up the pullback. All right, the bear pullback. Here you have your absorption. How do you know absorption? Again, what type of behavior occurs at resistance points? There's only 4 key types of behavior. One is a breakout, the second is failure, the third is absorption, and fourth is a spring or upthrust. This situation goes up, down, up, down, up, down. That type of behavior is obviously what? It's absorption. Why? It is at resistance. Every time supply tries, it gets absorbed. It tries again, gets absorbed. Tries again, gets absorbed. So every time it sells, you have a red brick, what happens? It reverses. So the selling cannot even follow through because demand keeps absorbing it at a resistance area. So that's absorption. It is also a type of springboard. After that, you get your change of behavior higher, and then you get a test in the absorption area. Now, how do you know it's going to go to the absorption area and that's where it's going to most likely, reverse? You don't know, but you do know that same area is minor creek. This is the high, this is the absorption, that's the rally. So this is your minor creek area. So it's your creek area, so you can expect that it'll either tap it or it might go a little bit lower towards the low bar. But here you have like 1, 2, 3 points of resistance. So, and the rally low. So it's very highly likelihood that it's going to get tapped and reverse. If you don't catch it here, you might want to wait for a reversal brick. Maybe that's what you want to do. But anyway, what's going on is it taps into that absorption or springboard area from where it rallies, and then again you get more absorption. Why? The same reasoning. What happens at resistance? There's your resistance. Goes down, gets absorbed. Goes down, gets absorbed. This is again your absorption. It is also a springboard. Why is it a springboard? Why is absorption a springboard? Because from absorption, what do you get next? You get big green waves. Basically, the market goes into markup. Springboard, set up, the markup, and markdown. So that's what you get right here. You have another springboard or absorption that yields markup. Goes high, 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 high. And then what happens? It tests the higher time frame breakout area. As it tests the breakout area, what should you expect? You should expect selling. You should expect the market to sell and attempt to pull back. So we wait, and what do you get? At that break, testing the breakout area, you get your first sign of selling right there. You get your selling, and then you get more selling where you have a breakout right there on that brick against this low. Again, what are you going to get at these levels? At support and resistance. You're going to get one of four things: breakout, failure, absorption, or springing up thrust. In this case, you got the first scenario, which is a breakout. Goes down. What happens after? Breakout get tested. Then what happens? It goes down. So now we see the position on the higher time frame. It's falling back, and it tests what? The low bar. Markets have a tendency to pull back to creek, but a lot of times they go deeper than creek. When they go deeper than creek, the next stop is the low bar. After that, if it goes into sideways consolidation, it can test the spring, the support level in spring. In this case, we are at the low bar. From the low bar, you are getting buying. So, you expect this to happen. This is what happens. This is how markets work. So you have to know where to expect the buying and selling so you can jump aboard. So here you get the heavy buying at the low bar. Why? They're trying to defend that low. So it goes sideways, and do you have a breakout? You have the breakout right here. You got a breakout right there against this area. You have the breakout, you have a change of behavior, and what else do you have? Confirmation yielded by the higher high. So you have the breakout, test, higher high. Now it's only a matter of getting in. How do you get in? That's a good question. The answer is wait for the market to pull back some, and you see the initial what? The initial reversal right here. It goes a little bit lower and then finally goes up, taps, and lo and behold, what do you get? The 6 here is the breakout, and it goes higher. Where does it go now? Well, if you're looking at this on a higher time frame, what should be your expectation? Your expectation is that it's going to test the high. Why? Because it pulled back. After the pullback, what's it going to do? It's going to go to the high. Then what is the high? Is resistance. What's going to happen there? one of four possibilities: breakout, failure, absorption, or spring and upthrust. So you know exactly what to look for. And that's what it does. It goes to that area. Where is it? That's the high. It taps that area. And what are you going to notice? You're going to see that as it taps that area, you have high volume, and you have high volume down, and you have your breakdown change of behavior. So what does that mean? It means they're selling resistance. You have the elements of a turn, which in this case you have climax and you have your change of behavior. Typically, you usually get almost always you're going to get a change of behavior, but most of the time you'll also get a climax. All right, so here you have your climax, here you have your change of behavior, add resistance, and you get a very nice little breakout right there in the middle. Let's mark it. And then it makes your lower low, so we'll just call that confirmation. And it does what? Test the breakdown. Test the breakdown and reverse and goes lower. So now where are we? Okay, we see this low here on higher brick size, and we have this little rally and it pulls back. It's not able to do any more damage. So what are we expecting? At least come back to support. In this case, it springs. Against that support level, you have a spring. It has your change of behavior from the spring and then higher high confirmation. So what does that mean? It means they just did a spring and they're buying from the spring. Alright, so obviously, like, what to expect next? Deep pullback. This time it was pretty deep. The pullback was deep, but could you have figured out where it's going to go? I mean, not really. I don't know which brick it's going to go to, but what I do know is that the trend is up after this COB and confirmation. The trend is up and we're in a spring position, so you have a very likelihood of a significant move, right? So draw the lines. COB, confirmation, spring position, down, rally, all this shit over here, and it goes. When it's in the spring position, at least come back to resistance. So it broke resistance, and it broke it with this break right there. High volume, biggest than 100 bricks, breaks the resistance area, goes up. Now what? Now you're at this point and you have blue, 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 blue. So there's selling. What do you note? You note heavy climactic action, heavy selling action, because of the biggest volume price in 49 waves, followed by biggest volume 49 waves. Then there's a slight tip off that it's going to go low. You see, this right here is not a spring. It is a lower low confirmation. So you have to keep that in mind. Like, you know, everyone thinks a spring upthrust is just going to support resistance, but sometimes the spring is actually forecasting lower lows to come, and the upthrust is a probe forecasting higher highs to come. So it's very important to note that. So that right there is forecasting lower lows to come. Why? Because you have elements of a turning point in the background. What are they? A climax here, a change of behavior here, pulls back some, makes a slightly lower low. Here I'm confused because of the heavy volume, but I see it has no follow through, and break. That is your confirmation lower. I don't really see the breakdown in this wave. I don't know why it's not clear, but it's just not there. So on the higher time frame, we see that this turning point occurred at a higher time frame rally. So this turning point is a counter trend turning point, pulling back on the higher time frame. This downtrend is nothing more than a pullback on the higher time frame. What levels do you need to see? First, you need to see Crete. Second, you need to see the low bar. After that, you look at the spring. So I'm looking at Crete and the low bar. They're basically, it goes, breaks through Crete, taps the low bar. What happens at the low bar? You have high volume. Is this a climax? You have to wait and see. Yes, it is. And it's confirmed. The climax is actually confirmed by the change of behavior. The change of behavior helps confirm the climax, just the way an automatic rally helps confirm the climax, and a secondary test helps confirm the automatic rally and the climax. So we see that this is a change of behavior right here coming from the low bar. Low bar has a climax, low bar has a change of behavior, which is confirmed by the confirmation, what happens next? Pull back to support, tap, and continue the uptrend. This is confusing. I don't know what it is. I think this, I don't know what the hell this is, but it goes up quite high, almost like a shakeout. And then it goes sideways and does this. Sometimes you just can't read it. Like, I don't know what's going on here. So you have high volume up, high volume down. Typically that's your climax and your change of behavior. But when you have this high volume back up again, back off. Because you're expecting low volume testing, not high volume testing. After the climax, there should be weakness, not buying. So this biggest wave in 11 waves is saying, uh-oh, back off. They're not done. So they just take it to resistance, and that's where the turning point finishes, because you have a springboard right here. This is this is an upthrust, but it's also a springboard. So this is a difficult trade. Then it breaks, and we're going back down here, right? What position are you in? All times you have to know your position. So you see the market here goes into support and resistance mode, and you had some buying. You had a confirmation, you had a tap, you had a move, but it could not follow through and it just broke down. But if you got in, like this is just a break-even trade. You're at support, and there's buying off of support. This is where it is, support resistance, higher time frame support resistance. I think right here somewhere. I don't know, somewhere. So here you had some buying. So we do classify that as a change of behavior. Pull back a little bit, goes up, has your confirmation, higher high, pull back, support right here, but not. This actually was if I had 100 of these, I would take every single one. You know why? Because you have your change of behavior, you have your confirmation, and you have this volume off the bottom. So even though this one doesn't work, the majority of them will work, and the majority of them will give very good moves. So just keep that in mind, because you have your volume off the bottom. You have break against one or two highs on good volume, good spread, and you have a little bit of a higher high. After that, you have a tap and reverse on good volume. But it just went to this resistance area from where it got sold. So typically, a couple of scenarios that could be happening. Typically, this will work. But when it doesn't, you always want to keep the possibility in mind of a spring or a shakeout. And then it's going to go. So chances are that here is actually a shakeout and it's going to reverse. So that's one possibility, strong possibility, right? The other thing to note is when we take a look at the higher time frame of brick size, we see that it's encountering selling at resistance. For example, this high, is this a breakout? It has 1, 1, 1, 1, and 4. This one brick has more volume than these 4 bricks. So this heavy selling at resistance, followed by even more selling, which has a 10, which is the biggest volume in 15 bricks and more volume than the up wave also. So, there's a problem. So there is a possibility that this brick here that says 12 with the biggest volume in 21 waves against this level is setting up the breakdown for continuing downside movement. So this is a very important thing to note because it can continue the downtrend. So it may have broken trend, right? How do I know? I have to wait. Right now I have the trend line here, and you know that typically if trend line breaks don't mean shit, right? But you've heard the saying, it's not whether the trend line get penetrated. What matters is the behavior of how it gets penetrated, right? So how means that when the trend line breaks, it matters how it's broken. It needs to break with a change of behavior. It needs to break with the elements of a turning point. It cannot just be like, okay, 1 or 2 bars that are piercing the low trend line or the high of the trend line. That doesn't mean anything. It could just have a change of angle, meaning instead of being a very strong trend, it can be a medium strength trend and it's just losing momentum. So here, what do we see with the lower trend line? You see already volume picking up. See this? Already biggest volume in 10 waves. What else do you see? You see that at resistance, this is a really crappy wave that goes. Look at this, 1, 1, 1, 1. That's not a good wave. What else do you see? You see the thrust, the shortening of the thrust. Look at this, 14 to 3. That's not a good sign. All right, 14 and how much? It's like a very small thrust. It's an up thrust, has not good volume, selling pressure increased, retested, and going down now, and at support found heavy volume. And the wave itself has heavy volume. If you have 1 or 2 more bricks down, it will break the trend line. There's a breakout, there's heavy volume, probably big price. What happens then? What happens is you might get a turn back up to test support or the breakout onto the downside, or it will continue down. So you want to be ready for that. We will see how this thing occurs. In either case, as a trader, right, you gotta know what to do. This shit, put this here, right? Oh shit, 1 second. I hate when this happens. So right now, I'm not sure if it's a breakdown, but I do note that there's this buying failed. That's bearish argument. That this change of behavior and all of that failed. That's what they think. Scenario 2 is this is preliminary accumulation or preliminary buying, and we have a shakeout here or a spring here to go higher, and then the selling will come through. I don't know, don't care. We'll find out soon enough. I think that's about it. Definitely gonna find out All right, everybody. So I'm going to leave you with this. Start off with support and resistance and understand the behaviors around it, of which there are breakout, absorption, failure, and spring and upthrust. With that in mind, draw trend lines. I know what some folks are saying, oh, the trend lines, no way, I just use horizontal lines. I have the same mentality, and let me tell you, they do help. Okay, they do help. But just don't use what folks use them for, meaning just a slight penetration, this or that. That's meaningless. Or get overly technical with how to draw them. It's like, are you kidding me? Just find 2 points of a cycle and that's it. Or draw too many. So you don't want to get bogged down into that. So you have to know your support resistance, the behaviors around support resistance, frame that within the trend on both the higher time frame and the lower time frame. And then it's just a matter of looking for turning points at those key areas. And after the turning point, if you can't get in, just wait for, a rally higher and get in on the pullback. That's basically trend trading. All right. Thank you. Bye-bye.